gas prices go up. We're already over $3 a gallon nationwide, and they could go much higher. 70% of our real gross domestic product is based on you, the consumer spending. 70%. The less you have, the less you spend, the weaker our economy becomes. Then you've got this subprime loan problem. You can't go a day without another expert saying, gee, it's a lot worse than I originally thought. So what happens? The Fed lowers the interest rates to help out. Unfortunately, that causes inflation. Now, gold has more than tripled in the last 8 years. The dollar has lost 40% of its value against the euro since 2000. All of this geeky economic talk means you're spending more on the same stuff to buy exactly the same stuff that you've been buying for a while, and our enemies are watching all of this very closely. So, America, here is what you need to know tonight. It is a race against the clock. Who can economically destroy the other first? Happy news, huh? To help me find out exactly where we stand in that race is James Hedges. He is the president and chief investment officer of LJH Global Investments. James, first of all, you're not a bear. You're generally a bull.
I am generally a bull, but I tell you what, even in preparing for today's interview, I started thinking about the multitude of things that are going wrong. It's a perfect storm waiting to happen, and there are a lot of problems out there.
Okay, I don't want to hear that from you, James. I'd like a little a ray of sunshine. I've been saying for over a year, we are entering a perfect storm where everything is just coming together, the things that you just don't want to come together. Explain for the average person why $100 a barrel or $120 a barrel oil affects your salad.
Oh, because one of the biggest costs for manufacturers and farmers and all the people that supply our economy is, of course, transportation. And so if you've got to spend more for truckers or shipping or aviation to get the goods to the grocery store, as an example, then your milk is going to cost more. Everything that you encounter at the gas pump, at the grocery store, every part of your life is going to be impacted by higher transportation, higher oil costs, and that's ultimately going to put a drain on your finances. The consumer isn't going to be able to step up to the plate anymore and continue to spend above their means.
And then we also have the problem of the Fed keep lowering, because I think this banking crisis is a lot worse than anybody is telling us, because everybody has a vested interest in making sure that it doesn't go bad. The Fed keeps lowering the interest rates, which makes dollars more available, which causes more inflation and helps our dollar to drop in value. Add to that, China coming out today and saying that they're going to start selling some dollars. What does that mean to us?
Well, what that means is that China is going to start buying U.S. assets with all of the bonds that we've issued to them for the past 5-10 years. And so that means that all the people that own dollars today, like the Chinese, the Indians, as well as the large oil-producing companies, they're going to own the United States. They're going to buy our financial services institutions, our factories, and all of our core businesses and industries. It's going to be a real threat to the security of the United States.
Why do you say that? Because I remember everybody got up in arms. I do my radio show from Radio City in Rockefeller Plaza. And when it sold to the Chinese, everybody said, or the Japanese, they said, oh, the Japanese are taking over. It didn't affect anything.
Well, it's not a question of whether or not that one isolated incident impacted change in the overall economy. It's a cumulative effect, because you're talking about the fact that we have got trillions of dollars of institutions owning dollars, owning our bonds. And with that being the case, they've got a lot of buying power in the United States. So it's not just, you know, one company or one asset. For instance, Bear Stearns was recently, a large stake was sold to part of the Chinese government, their investment arm. It's the cumulative effect of all these things coming together that, again, creates this notion of a perfect storm.
Okay. Thank you very much. I appreciate it. You know, I've been reading the Founding Fathers an awful lot, and Thomas Jefferson talked about this. He said, you're beholden to these countries if you allow this to happen, and it's what's happening now. I want to return now to another financial issue that hits home literally. It's the bottom falling out of the housing market. Robert Schiller is a professor of economics at Yale University. Robert, you are not just a professor at Yale. You are half of the Case-Shiller home price index, which is probably a fairer look at what's happening with home prices, because you're not beholden to the government or to the National Real Estate Association. What is really happening with home prices in America?
Yeah, we construct our indexes to be the basis of financial contract settlement, and the Chicago Mercantile Exchange now has a futures market on single-family homes based on our indexes. And these markets are predicting further declines, another 5 to 10% a year, depending on city, over the next year.
Now, help me out on this, because why does that make a difference if, as long as you hang on to your house? I mean, there's always swings in the housing market. Just hang on to your house. We went through it in the 80s. Why not do that?
Well, that's what I plan to do, and that's what just about everyone would plan to do. The question is, though, whether, at least for marginal buyers, whether it's a good investment at this point of time, because home prices have gone up more nationally than ever before. This was the biggest boom ever, and we're starting to see a correction. They're down about 4% from the peak, but they're still going down. That is, at this point. So it's an iffy short run, or even moderate run investment. We don't know.
Here's a problem that I see, Robert, is that people will psychologically look at their home value going down, and they'll think that they have not as much money, that they've lost money, that they're poorer, even though it's just a psychological game, really, if they're not planning on selling their house. And so they'll spend less. Foreclosures will start to happen with some people that won't be able to make it because of the oil prices. The Fed starts to drop interest rates again, and it is, like our last guest said, a perfect storm. Possibility of that?
Well, I am worried. I thought I was a big worrier. I guess you are, too.
There's nobody bigger worrier than me.
It affects people immediately. I mean, home equity loan. If you lose, you don't have home equity anymore, you can't get a home equity loan. So
the average person, if I'm just a regular schmo at home, what is the advice that you would give people to prepare for some sort of a troubled future?
Well, most people will stay in their home. People who own 2 or 3 homes, you know, they might consider selling. You don't want to get overexposed to a market that looks like it could be in a serious crisis.
Okay. Robert, thank you very much. Appreciate it. We will have more on this. Now, coming up, Hillary's lead over Barack is shrinking. Did the other Clinton have anything to do with it? Also, Rudy Giuliani gets an endorsement today from Pat Robertson.